Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for Thursday, February the 20th. Before I jump into the content for this video, please do me a huge favor, hit the thumbs up button. Don't forget to subscribe, and don't forget to click that bell icon to get notifications when I release new updates. So this is actually the first time I've sat down this evening to take a look at Bitcoin. I was watching it this morning. I went to bed with around $9,400, $9,450, something like that. So you guys are going to kind of get an over-the-cuff view because I haven't really had a chance to look at this, but I wanted to get the video out before it got too late. So we'll just kind of go through this together, and you can kind of see my mindset when I'm evaluating things. So the first chart I'm going to take a look at is actually the 3-day chart, because this candle closed, this red candle closed, about almost 3 hours ago now. So the candle is closed. And here's what I see on that chart. I see this green line, which was obviously our strong level of support around 95.50. Okay. I see that price slid under it not once but twice on the last candle and the candle before that. Okay, which is showing that buyers are having a hard time keeping price above it. And I also see that RSI has slipped below this line in the sand around 62. This was the line that was support in June. It was resistance in August. It was resistance in early January. And of course, it was support in late January/early February. So we're back underneath that line. So this looks bearish. And this actually does look bearish. Even though it's sitting on top of support, it looks bearish. Okay. Now, if I turn volume on, we're going to see an even bigger story, right? We're seeing that volume is actually increasing, and our sell volume is increasing. Not a lot, so I'm not going to put a whole lot of stock in that, but it isn't going up. If this red candle here had really low volume, then I would say that this dump has probably ran its course. The sellers are exhausted, and price is going to be moving back up. But that's not what we have. We actually have an increase in volume, which is showing that even more sellers are coming to the party. We also have this really long wick. Okay, we've got a tail too, but we've got a longer wick. And that wick is basically buyer exhaustion. It says that buyers tried to push this back up, but the bears stepped in and said they were having none of it. All right. So that's what I'm saying on a 3-day chart. Again, this level is going to be a key level. If we get a close under this level, it's a pretty sure sign that this is a full-scale correction and not just a dip. Okay. And remember, right now, it could be a dip still. It's not necessarily a correction yet, even though I lean that way. If you look back here in January, okay, we had the same thing. We had 2 3-day candles in a row that were both red, right? This one had a big wick. This one had a tail on it. Not all that different from this tail here. And then, poof, right up it went, okay? And this had also come back down, and this was basically retesting the top of this support, okay? Difference being, look at the volume. See how they had a lot less volume, okay? Not only did we have less, but we actually saw volume decrease slightly on this candle versus the one before it. Different story that's being told right now. So that is the 3-day chart. I'm going to take a look at the weekly, even though the weekly obviously is not closed, and it will not close for almost 72 hours. But let's just take a quick peek at it to see what's going on there. All right, so we've got these triangles. This thing is really messy, but we'll go through it piece by piece. Obviously, the triangle on the RSI, it doesn't really matter right now because we're nowhere near the top of it or the bottom of it, so I don't care anything about the triangle there. I care about the triangle momentum. So far, it's been acting as resistance, and so far, that's the story being told. Resistance, unable to break above it, okay? So I'm going to get rid of that, zoom in on RSI. What I care about on RSI, if you watch previous videos, you probably remember this. If not, this is what I care about. I care about this line right around this 52 to 55 area. So kind of a zone from here all the way up to this area. Why? Why do I care about it? Because in bull markets, for example, back in 2016, right, in 2017, we would have RSI come down to that level, find support, move back up into the overbought territory, bounce, overbought, bounce, overbought, bounce, overbought, so on and so forth. Okay, this level, so far it has not been tested in this market. It wasn't really tested in 2019. We cut right through it, went right up into overbought, and then fell right through it. Okay, there's a little bit of a resistance right here and a little bit of a resistance right here, but for the most part, it really has not been tested. So if price comes back down there and finds support on top of that, I'm going to view that as bullish. I'm going to view that as probably something similar to this area right here. Okay, where price broke up above it, cut right through it, came down, retested it in January of 2016, and then started the true bull market. So if we find support, this is kind of what I would be imagining for the future. If we fail to find support and we cut back down into this bear market zone, then I think that it's a sign that we're probably going to go down and test the bottom of this triangle for RSI. Okay. And as far as price goes, really what I'm watching on the weekly chart is I'm watching this 19-week moving average. Again, talked about this in lots of videos. Some people like it 21. If you back test, you'll find out that the 19-week regular moving average, the simple moving average, is extremely accurate, right? You can go back and see it over and over and over. Support all through there, support through here, support here, support here, support here, support here, right? If you've just been buying on that 19-week moving average, you would have made an enormous amount of money, depending on your budgets, right, in the last bull market. And if you'd have been shorting on that, you would have made an enormous amount of money in the last bear market, okay? So in 2019, we really didn't ride along that line. We got way away from it, came down, cut right through it, came up for a bearish retest, further downside. Came up through it here, bullish retest, further upside. So that's the line in the sand that I'm watching. It's sitting down around $8,435 right now, okay? So that's what I'm watching on the weekly chart. If we take a look at a daily chart, okay, let's look at this. We obviously had this rising wedge. That wedge is played out. Really don't care about it anymore. Even if it comes back up here, it wouldn't be that big of a deal to me. I wouldn't really look at that as, resistance per se. It would be interesting, but it's so high up there, not really looking for that too much, okay? What I'm looking for in this RSI is I'm looking to see if we get a correction, if price comes down and tests this trend line, this yellow trend line that dates back to 2018, okay? If it finds support in that, I'd be very bullish, and it might be a great place to look for a long. Again, that's if it drops that low. We don't know if it will. And, bull markets, typically you're not going to see oversold RSI, okay? For example, if you look back in 2017, right, right through here. So starting here, right, it would tiptoe right close to that area, on the corrections, but that was about it. So, if it gets down there, would it get all the way down here? Maybe, maybe not, right? Probably hit it further down here if it hits it. If it's a correction, right? If it starts getting way down here into oversold, it might be something entirely different. So still watching all these trend lines, right? I know this looks like a bit of a mess to some people, but there is a method to my madness. The top trend line is a trend line that dates back to 2017. It connects the highest close in 2017 to the highest close in 2019. And it was acting as support right here, so I was watching that cautiously. But of course, this was just a bearish retest of this line up here, and then it absolutely collapsed. So this line right now, it's resistance. This line was our 2020 support. Basically, it started on January 3rd of 2020, and it was our upward sloping trend line. We sliced right through it, closed underneath it. So now that is also resistance. So now the next level that I'm really interested in watching is going to be, first, the 200 moving average, okay, which is at $8,844, okay, and if it cuts through that, then I'll be interested in watching this trend line right here, which is the trend line dating back to the December bottom, okay? It's a much more reasonable trend line, if you will, compared to this crazy parabolic trend line. So I can still get here and be very bullish in nature. And if we take a look here, that does line up quite nicely with this fractal that I've been talking about over the last week or so, these ghost bars, okay? What I'm going to do is I'm going to take this fractal real quick. I'm going to make the bars easier to see, and I want you to just watch how closely these line up with what's happening. So we can see here that this was actually a perfect match back here, okay? This one got pretty far off. This one was really close. This one far off, but here it came right back up. Match the top all over again, and then this red candle was very, very close as well. Okay, this big red candle, you can see how close it was. And here's this candle yesterday, not all that different. And then, if the fractal plays out, this is where we're at. What comes next is the dump, and of course this would dump down right around that support line. Again, I didn't draw it a specific way to make it fit a bias. That's just how it happened to line up, and it's interesting, right? So if we do get down to that level and consolidate, again, talked about this in lots of videos, especially if it comes all the way down here, that would be the 61.8 fib down around $8,000. I would definitely be looking for longs at that level, even if it's just to play a dead cat bounce, okay? Because on this fractal, price moved up about 15 to 20%, so that's a really good trade. And if it keeps moving down, of course, I can set a stop loss and it's not that big of a deal. I would be looking for setups. So I'll be very clear when I talk about going long here. I'm not going to just put a bid for $8,000 and be like, okay, fill my bid. I don't care what else is happening in the market. No, I'd still want to look for bullish divergences. I'd still want to look for reasons to go long there. But what I'm saying is, my bias would be very heavily on the long side. I wouldn't be looking for shorts. I would be looking for longs, okay, on a swing trade, a trade that might play out over the course of a week or 2 weeks, etc. So if it does end up being bullish, if it ends up being a correction, that's a very cliche correction down to that 61.8 Fibonacci level. And again, if it starts moving back up from there, it could potentially put in this giant inverse head and shoulders, which would be extremely bullish for Bitcoin. On the flip side, if it ends up being a fake out and starts going back up, people would start thinking it was an inverse head and shoulders. But if you look at the way this fractal lines up, it would basically lose it right here around resistance and then collapse down to the next level of support, which of course is this trend line. And again, I didn't make this line up. This just happens to be the way it looks, right? This is the trend line from February of 2019 going forward, okay? And then if the fractal plays out, it would run along that support level, and then finally capitulation would occur. And again, fractal looks, very reasonable. It happens to end right on top of the long-term trend line dating back to the bottom of 2018, and that would put us down around $5,300 to $5,500, which lines up quite nicely with the 200-week moving average, okay? Now, I'm going to address something else real quick because I know there's people that are like, this is definitely not going to happen because we just had a golden cross. You know what? You're right. We did have a golden cross. I don't think there's anything wrong with watching that. I think it's a really bullish signal, generally speaking. Golden crosses on a daily chart, simple moving averages, pretty big deal. Okay, the last time we had a golden cross was back here in April, and of course we know what happened after that. I would just caution you to be very careful about getting too carried away on the news of a golden cross because this very same scenario played out in 2014, okay? You can see here that in 2014, price had come down for a death cross, came right back up for a golden cross, okay? So keep that in mind. See the way it looks? Death cross, a few months later, golden cross. This is what we have now. Death cross, a few months later, golden cross. And what followed after that was another death cross, okay? Basically, this was a giant fake out, and price actually collapsed from the point of that golden cross, right? It crossed right here. Price closed at $631.82. From that point to the bottom, price actually collapsed 74%, okay? And it was over the course of about 6 months that happened. So after the golden cross, within 6 months or 187 days, price fell 74%. So if we do the same thing, if we go over to this chart here, I'm going to make these ghost bars a little bit less glaring. And if we take a date and price range, and this was our golden cross right here, so price closed at $10,188, and if this thing drops 74% over the next 187 days, that would give us a date of around August, and that would give us a price of around $2,600. I'm not saying it's going to drop to $2,600. Right now, I'm still going to play this as a bull, and I'm still going to play it as a correction until something changes and until we start putting in some really bearish structure. But I am saying it's a possibility, so you need to be aware of it. Okay, that's why I took profits on a lot of my coins. So definitely a possibility. Okay. So now what I want to do is I want to turn these moving averages off, and I want to talk a little bit about structure, because what I said the other day was I would be bullish unless we started putting in bearish structure. I'm still going to stay bullish a little longer. I'm still going to play this as a correction, like I said, but I am being mindful of what's happening, because if we look at a daily chart and we put this on a line chart, this was our high. This was our higher low, right? So higher high, higher low, everything was all good in the world, right? Had this little false high. I wouldn't even count that one as a lower high. I would just say that this was the actual low. So you got your higher high, and then you've got your lower low, right? The low is much lower than this. So that was the first sign that trouble was brewing. But then you had a lower high. This is a daily chart. And now you have a lower low. So you have high, lower low, lower high, lower low. That's a 3, right? That's 3 points. Down, up, and then a break. So that is indeed a downtrend on the daily chart. Okay? Remember, the big mistake that I made in January was I kept waiting and waiting and waiting. And I wouldn't call it a mistake. It was playing it safe, but hindsight being 2020, I wish I would have been a little bit more aggressive, right? Instead of watching the daily and saying, okay, the daily's in an uptrend, I kept waiting for that weekly to flip bullish. And by the time it flipped bullish, price was already above $9,600. Okay. So I don't want to make that mistake again, but I also don't want to get overly aggressive and start revenge trading, trying to make up, some of the money I didn't make. I didn't lose money. I just didn't make any money, right? Well, I made some, but not as much as I would have if I would have been longing it instead of shorting it. Okay. So when I'm watching this on the daily chart, this is indeed a downtrend. Okay, we've got that bearish structure forming. If we look at it on a weekly chart, right now we don't know yet because this was indeed a higher high. But this could be an outlier. Okay, this was our higher high back here around 9,500. We closed above it. This could end up being an outlier, meaning that it was just a fake out before it continues moving down. So there's a lot of what ifs right now. And, if you are a hodler, if I'm just hodling and I wasn't trading, I would just be sitting patiently waiting to see what happens. I would have taken profits by now and I would just be waiting, okay? If you're a trader, there's tons of volatility in this market right now. Swing trading is going to be pretty tough because of these big wicks and tails we're getting. They're really trying to stop a lot of people out. But as far as shorter time frame trades, this has been, a treasure trove for more active traders because it's moving sometimes 3, 4, 5% a day, which is causing the altcoins to move sometimes 10, 15, 20%. So let's take a look as an example at EOS, right? We'll look at a couple altcoins. If you look at EOS, this is an hourly chart, okay? This is just today. Remember a couple days ago, I drew this up and said that I had a target down around I think it was 319, 316. I was looking today, I like the log version a little better, okay? It seems to be following that a little closer this time. So that gives us a target of 339, okay, if it plays out. But just today, if you look at this thing moved down to 380 and then bounced 13%. Now, I'm not saying you would have been able to get that trade. I didn't look at it that close, right? So I'm not necessarily saying this was a trade you should have taken. I'm just saying the volatility makes for some really great opportunity. If you look at this on a 5-minute chart, I can see all kinds of examples of why I might have went to long this if I was awake. Here's one right here. Okay, there's more to this setup, so be careful, reading too much into a trend line. But just as an example, you had this touch, you had support, a third touch, and a fourth touch, right? While this was moving down to this area of support right here, had tweezer bottoms. There's all kinds of things right there that would have made me want to long that. So if you long this level of support, right, right now you'd be up about 7%. That's a massive freaking trade, right? That is a massive trade. And that's over the course of less than 12 hours. Take a look at Litecoin. I have not looked at any of these before the video, so I'm just doing this off the cuff. Same thing. Look at this. RSI got crazy oversold down here to around 8. Okay. And then it put in this beautiful uptrend, right? Now, I'm not saying the price was uptrending. I'm saying on the RSI. So right here, you had some massive bullish divergence, a much higher low, a much lower low on price. So that would have been a reason to go long right there, okay? I could have longed it back here, probably would have been stopped out, could have re-longed it, right here if you wanted to. Or if you were more conservative, maybe you waited for another touch, right? Could have longed it over in this area here. Let's just say you longed it there at 6:05 p.m. Central Time. Well, right now you'd be up about 4%, and at the peak it was up almost 6%, right? Those are the kinds of trades that, these conditions only come along every few months. So those are the kind of conditions that day traders really want to capitalize on, okay? These massive 3, 5, 10% movements. Zcash was another one that just went absolutely bonkers over the last couple of days. I don't really want to use Kraken because they've got poor liquidity on Zcash. So you're going to have these tails and wicks. Let's look at Zcash on a different exchange. Let's look at Binance, right? We'll look at a tether pair. So if you look at Zcash, this is an hourly chart. 4 days ago, it got all the way down here, but let's talk more about today. Let's see what happened today. So RSI got way oversold. Started putting in this trend line. This one's not quite as obvious, right? There were some trades here. Like, for example, right here, there's a trade, right? Somebody might have been on scalp that for about 2%. But then it really started to break down through that line, so I wouldn't have felt that comfortable trading that. Now, this line here, maybe, right? Touch. Maybe the third touch. Somebody could have longed it. They had found some other, reasons to take that trade. Immediately bounced, over 5% in 15 minutes. Crazy stuff, right? But as far as these alts go on the bigger time frame, they all look like they're trying to correct to me, right? They all look like that. So I'm not longing them. I'm not buying back the alts that I sold. I sold my Zcash at around $71 or $72. Have not bought it back yet. I had sold my EOS. I had sold some. I started taking profits on EOS down around $4, and then I scaled out all the way up to like $5.40 on about 60% of my EOS. So haven't bought that back yet. I'm still waiting to buy it back. Granted, it would have been nice to buy back at 380 and then play the bounce, but I didn't. I was sleeping, so no big deal. Litecoin, I haven't bought my Litecoin back yet. Ethereum, I did buy my Ethereum back. I wish I hadn't have, but I had actually sold my Ethereum. I bought it back, sold it on another bounce, and then I ended up buying it back again. I got stopped out. That's what happened. There was a wick that stopped me out at like 268. So, it went up to 264 yesterday, but I got stopped out. I think it was the 18th I got stopped out. Might have been the 17th. Anyway, whatever day it was, I got stopped out at 268, and I haven't sold it again since then. So I probably should have sold it on the 18th when it pumped up to 286. To be totally honest, I didn't even think about it. I was more focused on Bitcoin, so that was a mistake on my part. This looks like I'm just really looking at this for the first time, to be honest with you guys. This looks like a perfect double top. Bam, 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 right? And what happens with double tops? Necklines get retested, right? We know that. Necklines typically get retested. Where's the neckline? It's right there, all right? It's right at 258.50. So right now, price is actually trying to peak back above that, okay? If it peaks back above it, then maybe I'll be glad that I didn't take profits on the Ethereum that I got stopped out on, okay? If it closes back underneath that, I'll probably go ahead and move out of that position with a stop loss, of course, and wait to buy back much lower. If this does correct, I still think that with such a parabolic move, it's entirely possible that Ethereum could pull back all the way down to this 140 to 150 area, okay? I'm not saying that it's definitely going to happen, but I'm saying by textbook analysis, after a parabolic rise, you typically retrace about 80%, which will be down around 138, okay? I would be watching it closely if it has a full retracement, or if it does, it would be a full retracement, that'd be 116. But if it has a nice retracement, then I would be interested in at least looking for longs when it gets down to the golden pocket, down around this 160 to 165 area. Okay, I wouldn't be completely blind to taking a long. But yeah, right now it looks pretty cliche. It's funny when you look at a candlestick chart. Sometimes it looks like kind of a muddled mess. It's like muddy waters. But then you put it on a line chart, and it's like you don't get a much more perfect double top than that. That is that's perfect grammar, a perfect M, right? That'd be an A in the writing class for the letter M. So it'd be interesting today to see what happens. Yesterday it closed under the neckline. Today it looks like it's trying to retest it. One of the reasons I wouldn't just immediately sell right now my position, number one, it's a long-term investment. So again, to be very clear about this, it's not a trade. It is a trade. It's a position trade, but it's not a trade where it's like, I have a stop loss in play. This is an investment that I'm already okay with. If it goes to zero, it goes to zero. This is not an investment where I'm worried about, moving in and out of it, or anything like that. When I trade this, what I do is I'll put a stop loss. So let's say that I sell it, right? I'll put a stop loss so if it starts to go up, I get stopped out that way. But I don't put a stop loss if it starts to go down. Okay, these are my long-term holds. So don't necessarily want to sell it right now because, number one, even though it did close below this neckline, it's not very far below it. It's like it barely peaked under it. So it's entirely possible that it's going to try to pump one more time and then go down. So if it does that, if it looks like it's got a weak pump, a low volume pump going on, that would give me a chance to get out without being stopped out. See, the problem right now is if I take profits at 258 or 260, even though I think it's going to go down, it might go up $5 or $10 first, and that'll stop me out, making me buy it back, and then it'll go down. So I'd rather wait and try to get out a little higher, or I'd rather wait for a little bit more confirmation that's going down first. Okay, so that's kind of how I feel about Ethereum. And then, of course, I'll be watching this weekly channel on Ethereum going forward, right? What happens? Does this go down and touch the bottom? Does it go down and touch the middle? That'll be interesting to watch, okay? Also, one other thing I want to point out real quickly, guys, is somebody asked in the comments, they said, hey, could you show us how to do those ghost bars? You know what? This used to actually confuse me too, and I could never find anything teaching me how to do it. I don't remember how I figured it out. I don't remember if I found an article on it eventually or if I stumbled on it or what. I think I just was playing around and finally figured it out. But it's really very simple. If you go over to your left-hand side in TradingView and click on bars pattern, you can just click on some candles. Let's say, for example, you want to get a fractal from here to here. So you click up on the first one, click on the last candle you're interested in, and then it gives you the pattern. And then all you do, you just move it over wherever you want to line it up with. So for example, if I wanted to line this up with this top right here, it's a little bit of a pain because they put this dot on top of it, which makes it hard to see, but you just got to kind of look. So the top here is 13,831. So then I'll just kind of draw that up there and try to get it to line up with it as nice as I can. Okay, so there you go. There's the fractal. Now I have my ghost bar pattern, right? You could also use a log chart, which changes it quite a bit. You can see the difference there. Okay, but yeah, that's how it works. So like this fractal that I've been showing you guys on the daily. Let me show you how I did that real quick. All that was me going back to July, going to the top, and then going to the bottom in December of 2018. There's the pattern. And then I just moved it over and lined it up with the top here. Just like that. Okay. And that's how I got that fractal. And you can see that's how it comes down. And again, that lines up with all those different levels of support. So you saw I just did that. If I draw from the bottom here, see that trend line, that bottom trend line? Bam. So it's no manipulation on my part. It's not like a bias making it line up. It's just how the fractal lines up. Okay. And don't forget, guys, again, I'm a little bit skeptical that fractal is going to play out at this point. We did break that weekly structure, but if it does, it wouldn't completely shock me because if you look, that was about 219 days into that market cycle that topped out. And this one seems to have topped out right around 232 days. So it's fairly close, right? Not exact, but fairly close. So I think I'll go ahead and wrap up there for today. I hope you guys enjoyed the video. I know the last few days, they've been a little bit more sporadic. Had some, personal things going on. Not bad, good personal things. And spent some time with some family and also just took a little bit of a rest. And also the market's been moving a lot. So I know a lot of people out there make their living teaching. I know a lot of people out there make their living selling courses. And, I'm not saying that's good or bad. But for me personally, only about 10% of my income, less than 10% of my income, comes from selling courses on trading. So when the market gets really volatile for me, I have to prioritize putting food on the table for my family, and that means that doing videos for free on YouTube and stuff like that takes a little bit of a back seat. So that's not normal. It's not that I'm going to abandon you guys. It's not that I'm suddenly going to stop doing videos, but there will be those times where there might be a day or two between videos just because this literally is not what I do for a living. This stuff is what I do for a hobby, and trading is what I do for a living. Okay. So with all that being said, please remember I am literally some guy sitting in a spare bedroom, so nothing in this video is trade advice, nothing in this video is financial advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you guys enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can join my trading course if you'd like to learn technical analysis. This is James with Crypto Common Sense, reminding you to please trade safe.